Let's continue with our stock-specific theme. We like it, don't we? Off the back of the RBA's 50 basis point rate hike that came through just yesterday. We'll find out what the team over at Bell Direct has got in their sights with Grady Wulff. She's joining me live in studio. Nice to see you.
Nice
Good morning
to see you.
you.
Good morning.
Okay, so I noted today, actually I just saw this come through, that Bell Potter has reinitiated coverage on Star Pharma. Do you have the details?
I do have the details. They've reinitiated it. The share price is down 55% year to date, but the global biopharmaceutical company is a world leader in development of the dendrimers. The dendrimers for respiratory viruses. We know them for their Viralase nasal spray, and notably they've actually only got 3 over-the-counter drugs at the moment, but no FDA, EMA or TGA approvals. So Bell Potter's reinitiated their coverage because they see that the regulatory approvals for the pharmaceutical assets of the company are going to come very soon. So they have initiated it with a speculative buy rating and a $1 per share price target based on the blend of relative valuation and discounted cash flow methodologies as well.
Okay, so Star Pharma, a specky buy at Bell Potter.
Yes.
What else?
At the moment, we're looking at genetic signatures, but they've downgraded the price target from $1.25 per share to $1.20 per share. This implies 26% share price growth in the year of the last closing price of 92 cents per share. The reason they did this was it's a specialist molecular diagnostics company, so we know them because they had strength in the year due to the COVID-19 testing, and that's why the price has been downgraded, because they think that the testing was peak last year, and it would be kind of tail end slowdown this year. The catalyst in FY23 is a regulatory hurdle as well for the company's enteric proteasome kit, which is expected in the second quarter of FY23. They see that that's going to be a bit of a hurdle at the moment because they're not 100% guaranteed for that regulatory approval, and expansion in Europe as well is looking to be a bit challenging this year. So that's why the company has gone with, Bell Potter's gone with at the moment they've got the speculative hold rating, but the price target has downgraded to $1.20 per share.
Okay. All right, I love these broker moves. Now, Kronos, I noticed that it was one of the best performers yesterday.
It was, and it is.
Yeah, okay.
Yeah, it's up 154% year to date, and Bell Potter's research is actually titled "It's High Time." So we know that there's a lot of momentum in the medicinal cannabis space at the moment, and a lot of growth in the space as more uses for the drug at the moment are coming out. It is a leader in the market for distribution to pharmacies and provides patient consultation services through its platform, which is the CanView platform. That's a really key driver for impressive growth in the last year, and CanView 2.0 is coming out to streamline the process of both treatment and prescriptions in the near future. The current system provides access for patients, doctors and pharmacists. So it's a leader in the space, and it provides the widest range of medicinal cannabis options compared to competitors like Anspec and Health House. Bell Potter has initiated coverage of this with a buy rating and a price target of 60 cents per share, which is above the 48 cents per share that it currently is. Kronos notably is currently the only ASX profitable dividend-paying medicinal cannabis company. So
I knew that, you know.
Did you actually?
I spoke with the CEO last week.
There you
and
go.
The other interesting thing about it is that it's a data play, really. They've
Yeah.
got a lot of data coming through.
They do.
So it's sort of a techie way to play the cannabis, the medicinal cannabis story.
It is at the moment, and it's kind of the best way to enter, really, because you're not just delivering one product or service, you've got the revenue of both. So yeah, no, they're doing really, really well.
All right, so that's 3 stocks to watch.
Yes.
According to Bell Potter.
Yes.
Grady, just a general question. I mean, what's the talk around the traps in terms of this interest rate hike?
Yes.
How will we see it expressed in, if at all, when it comes to sort of investor enthusiasm, risk appetite?
I think investors are kind of waiting for Philip Lowe's speech later this week, as we know, and GDP data out today. So I think those are the 2 key points. Investors have been a bit reluctant to kind of jump straight back into investing straight away. We do know that investors are likely to feel the brunt of the interest rate hikes a couple of months after they after they are announced. So I think everyone at the moment is going, oh, it's okay, it's fine. And a lot of young people have locked into fixed interest rates till next year. So they're not feeling the full brunt, and they're not really looking ahead to see, oh gosh, soon I'm going to feel this full brunt. And we know this because retail spend is at a record high right now. So consumers are still spending. So it's saying, are they not preparing for the future, or do they just think they're okay? So I think a sentiment will come out a little bit. It'll be more noticeable on Thursday when Philip Lowe speaks to see exactly what the way forward is, because the talk is that it's 25 basis point rises from here on in, because we're hitting that kind of neutral zone. But it'll be really interesting to see what he says on Thursday.